Welcome back, everyone, to another monthly performance review of our asymmetric trading system model portfolio, or as we affectionately like to call it, the AST system. We are in the last month of our first year of trading this system. We started it officially on January 1st of 2021. We're obviously heading into the latter part of December right now. This is our performance update for last month, for the month of November, and all of the preceding months as well. So we'll let you know where we're at year to date versus the market, and whether or not we are hitting our dual mandate of beating the market returns and or doing it simultaneously with taking lower risk. And we measure lower risk by measuring standard deviation. That's how we define volatility. That's how we define risk. So let's go ahead and let's take a look at it here. The month of November was a tough one for the market overall, and that was reflected in our portfolio as well. The market was up, it was down, it was up, it ended down a little bit at the end of the month. But the real story for November was volatility. There was an awesome amount of volatility pushed through on several days during the market, and we were really able to manage that quite well. So let's take a look at some of the numbers here. We actually started the month off for November, or at least my model portfolio did, with $46,718. So 46,718. That was the starting balance of my portfolio. As we started the month of November, we started right out of the gate with a couple of losses, and then we took on some wins. We had a nice little win streak going there, and then again, it was sort of a seesaw throughout the rest of the month. You can see a loss, a win, some losses, a win. We ended up with a few more losses and wins, just sort of seesawing back and forth as the market really had a hard time establishing a direction or a bias. A lot of our technical signals that we used were neutral in nature for a good part of the month, and that makes it tough for us to put on directional trades, whether they be bearish or bullish. And so there was a little bit of vacillation in the portfolio, but again, relative to the overall market here, which you can see had not only a poor performance for the month in that it ended at a loss, it lost about 0.8 of 1%, at 0.83% exactly, but it also had some pretty good volatility. There's almost a 2% drawdown right there in one day, a 2.2% drawdown in one day right there, almost a 1% drawdown in one day right there. So there was some pretty good volatility in the marketplace during the month of November. We were able to manage that fairly well. Let's take a look at the overall results in a side-by-side comparison. So once again, I did start off my model portfolio with $46,718 to start the month of November. I ended up at the end of the month with a $728 gain. That's a 1.6% gain on the month. And it was a positive alpha month for us. Once again, positive alpha, again, just simply meaning that we beat the market returns. We beat a passive index, and we did it by taking less risk. Okay, so positive alpha, we did get a 1.6% return versus the market's loss of basically 0.8% for the month. We had 9 profitable trading days and 12 losing days. So it really was a story of managing risk. We had only 9 profitable days out of the month. The market only had 9 losing days. So the market actually had more winning days than we had, but we ended up taking 72% less risk than the overall market, or 72% less volatility than the S&P 500. I think what is really telling in terms of our results is that, well, we only ended up at a 1.6% gain on the month. It was over a 200% better result than what the overall market did. And again, that's just the goal here, guys, is to beat the overall market returns and do it at less risk or garner positive alpha. But $302 was the largest one-day drawdown that I had in my approximate $47,000 portfolio for the whole month, or 0.06% drawdown versus, again, a 1.9%, a 2.2%, an 0.8% drawdown in the marketplace. So we were able to do our job of beating the market last month with actually taking, again, 72% less risk or volatility. Where does it put us at for the year's results? Well, you can see right here our year-to-date results, again, starting in January 1st of this year. And we are just absolutely clobbering the market, just absolutely clobbering the overall market results. Now, I don't want to let the cat out of the bag. We're here as I film this on December the 12th. So we've got just about half of the month of December and 2 weeks or so of the year left in our trading results. So we could certainly fumble the last 2 weeks and mess up our results for the year. But knock on wood, assuming that we don't do that, we will more than have doubled the market's return, while on average taking somewhere around 70+% less risk. So to say that our overall portfolio, our overall results have been a success is one of the biggest understatements that I've ever made as a trader. We have just absolutely been thrilled with the results of this portfolio for the year. And again, one thing that I would stress in this portfolio is that it is designed as a risk management tool, and as such, we have the provision to go short the market and short a lot of different underlying assets. We haven't really had the ability this year to stretch our legs in that aspect of the portfolio very often, maybe twice. We've had a couple of months of this whole entire year where our technical signals were really flashing bearish enough that we felt comfortable getting really bearish in our trades. And of course, that's where we really get the opportunity to be able to stretch our legs. If you look at the month of September here, and you say, where did we really get so far ahead of the gains of the market? Well, in September, that was obviously a horrible month for the stock market, down almost 5%, and we were up 6%. Well, that was obviously our ability to make money when the markets drop. We haven't really had a lot of those opportunities, so we are just sort of chomping at the bit for some ugly market conditions, because I think that would let us stretch our legs even more. But right now, guys, I cannot say enough and how happy and really proud. I feel like a proud parent in terms of just looking at how well we have done over the year so far. Again, we do have 2 weeks to go, and we will report our not only December results here in a couple of weeks, but our year-over-year results, and we'll carry that into 2022. So it's been an awesome year so far, guys, but there's our results for November in the AST program. If you are interested in looking at managing a passive portfolio, again, the AST program is a passive asset allocation model. We put our new positions on in the morning each day, depending on how many positions. Sometimes it's as little as 1 or 2 positions. Sometimes it's as many as 10 positions, but it usually takes, 2 to 5 minutes as the market opens up to put those trades on, and then you close your computer and walk away. They manage themselves. It's not a trading system. It's an investing system. You don't have to stare at your screen every day. We say that if you're putting more than 5 minutes a day into this program, you are overthinking it. But there are some limitations to the program. You do really need to have more than $25,000 of capital to be properly allocated with our asset allocation. And it does not currently, we're working on it, but right now it does not currently work for IRAs or retirement accounts because of the shorting aspect. We do go short the market. But if those two qualifiers don't preclude you, and you'd like to take a look at how we perform, what we do, how we put the trades together, we do have a 2-week free trial that you can check out. I'll put a link in the description box below. You can check it out, and we'd love to have you take a look at it. That's our results for the month of November, guys. We'll be back in a few weeks with the year-end results.